Meeting on Wednesday the 23rd of November 2022. My name is Councillor Mark Clifford and I am the Vice Chair of this committee. I will be chairing this meeting today in the absence of the Chair, Councillor Deborah Platt. Please note this meeting is being live streamed on YouTube. When you want to speak, please raise your hand. When I invite you to speak, please turn your microphone on and please turn your microphone off when you have finished speaking. If the technology fails, then I will adjourn the meeting for a few minutes to try and resolve the issue, or if this is not possible, a new date and time will be organised. Please can everyone ensure their phones are turned to silent, and we are not expecting a fire drill, so if the alarm sounds, please exit the way you came in. So I'd like to start, and we'll start with apologies. We have Councillor Deborah Platt. Is any more?
Yep, Councillor Magda Collins will be subbing for it today.
Oh, thank you. And we will go to minutes of the meeting held on Wednesday the 3rd of August 2022 of the Governance Committee. And are the minutes a true record? And can we approve them? Are we all happy to approve? Yeah, all in favour? Yeah. So, declarations of any interest is next. Members are reminded of their responsibility to declare any pecuniary interest in respect of matters contained in this agenda. Do we have any declarations of interest? No, thank you. Moving on to agenda item 3 is the external audit plan and addendum at pages 11 to 18. Georgia Jones from Grant Thornton will present this report, please.
Thank you, Chair. So members will recall our audit plan for 21-22 was issued earlier in the year in June. At that time, it hadn't been confirmed whether the council was going to prepare or needed to prepare group accounts. So that audit plan just related to our usual single entity work that we were required to do. Since then, discussions with the council have confirmed that group accounts were required and they have now been received. So this is really just an addendum to our plan to confirm that and just set out the risks identified around that. So page 13 is almost kind of word for word of the original audit plan. It's just got that paragraph on the right-hand side, group audit inserted, just to confirm the group audit is going to take place at the same time as the financial statements audit. And then the following page just sets out the scope and risk assessment for that audit. So we separate the group down into its components, which is the council and the leisure company. And that just shows the risks that are identified in each. So those risks for the council haven't changed from the original audit plan. It just confirms the group risks there for you. So really that's all I was going to say. It's really just for information and confirmation of the scope of the audit. I'll take any questions, Chair.
Thank you. Is there any questions for Georgia? No? All quiet? No, thank you, Georgia. That report is for noting. On to agenda item 4, external audit findings report, and you'll find that on pages 19 to 58. And again, if I can ask Georgia Jones from Grant Thornton to speak on this, please.
Thank you, Chair. So the audit of the council's financial statements has been ongoing and is substantially nearly complete now. So this is our findings report to report to you the work that we have completed and any findings from that work. So if you start on agenda page 21, that kind of gives a summary. So at the time of writing the report, there was a number of areas outstanding, but quite a lot of that has moved on since then. So the grant income is substantially complete, the testing of that. Income and expenditure and payroll is substantially complete now. NNDR appeals is complete. We're just finishing the council tax reliefs testing and related parties. The evaluation of investment yields is now complete. We received the assurance letter from the pension fund auditors this morning, so we're just doing our final procedures around that. And then it's just really, all of the rest is really kind of a final check of the final statement of accounts, receiving the letter of representation, which is on the agenda today, and just, confirming final kind of closure items with management of the council. So we do anticipate at this time the audit report will be unqualified, and we do anticipate meeting the deadline, which is a week today, the 30th of November. The following page just confirms that we also do our value for money work. You'll recall that the timeline for that is 3 months after the audit opinion is given. So we have started that work, and we do intend to report within the 3 months of the audit opinion, and quite likely earlier, but we'll bring that report to the next committee. Then the rest of the report really kind of goes through the significant risks that we set out in our audit plan, the work that we've done to address those risks, and any findings. So agenda page 24, that just confirms the materiality levels we're working to, and it also has the group materiality, which is very similar in there, just so you know what levels we are working to. The next few pages set out the significant risks. So management override control, page 25, is a mandatory risk for all kind of audits under the auditing standards. We've completed the work there, and we haven't got any issues to report back to you. Following page around revenue recognition, again, this is a mandatory risk. We are able to rebut this risk, which we have done so, but that doesn't mean we don't do any testing on revenue. We still do our usual testing around revenue, and again, we haven't got anything to kind of report back to you at this time, and that testing is now complete. Valuation of pension fund net liability on the following page. Again, a very big figure in the council's accounts. As you'll recall, there's lots of assumptions which underlie that figure, which we need to kind of get assurance over and do some testing on as well. So we've done all our work in relation to what we need to do for the council. As mentioned, the pension fund auditor has provided us assurances today. So we are just doing those finalisation procedures, looking through those assurances and just checking that we don't need to do anything further. Following page, the valuation of land and building and investment properties. So there was just an issue on this around kind of one of the valuations of a GP surgery. That hadn't originally been obtained when we started the audit, but that has now been obtained. So we've been able to kind of review that as part of our review of the whole kind of valuations that were done in the year. So the area is kind of substantially complete, and we've not identified any key issues. The only thing we have identified, and you've got kind of a kind of paper copy been circulated. So there's a couple of additional things on there that have been identified since the writing of the report. And the third one on there, which kind of we've spoken to the council about, and they kind of raised with us as well, is that one of the valuations has some double counting of plant in it. So that will be amended, it be in the final statement of accounts, and that's set out for you there. So officers have provided those additional items for you today, so that you're fully aware of any changes that are required. The group accounts, we're just finalising some procedures around the group accounts, so this is agenda page 29. So we're satisfied that we've got the group accounts, that they've been kind of pulled together correctly, but we are still doing testing of some of the figures within the kind of company that has been consolidated. So we're just finishing that at the moment. And then we talk about some key judgments and estimates. So similar to kind of significant risks, the items where there's kind of key assumptions underlying them and the work we've done on that. So you've got kind of the land and buildings and investment properties, and then the pension liability on page 31. Just in that assessment column, my apologies, that should all be green in those dots in there. So the assumptions are in line with what we'd expect. So that was just missed, but that should all be green. But you can see on the far right, it does kind of confirm that that light purple means that we're satisfied that the key assumptions are reasonable and as expected. And then the following page is a few more areas that we just bring to your attention. That provisions work should be complete today. There shouldn't be, as far as we're aware, anything coming out of that you need to we need to report to you. And then just around heritage assets. So there is a kind of an issue around there. So initially kind of Astley Hall has had some work done on it, and although that kind of the valuation of that work was in the accounts, it was just in the wrong place in the accounts, so it wasn't against heritage assets. So that has been corrected. And then again on the additional paper that you've been given as well today, there's another issue around heritage assets, just in terms of the valuation of the actual heritage assets. So there has been a valuation done, so that the accounts just need amending to reflect that valuation, and that's set out for you there. Following page grant income, we're just finishing that at the moment, but again, nothing to report to you in terms of the work we've done to date. And we just also have a look at the council's minimum revenue provision. So that's kind of the amount from revenue that you kind of put aside to make sure that you can kind of pay your future debt and your capital financing. So we've assessed that, and we did make a recommendation on it last year that it was reviewed, and you can see that this year we've said that actually the percentage of MRP has increased, which is kind of, you know, what we would hope and expect to see. So we haven't got anything further to report on that area. Then the next couple of pages, just other things that we just kind of, you know, you need to know in terms of what we do as part of the audit, and there's nothing really coming out of those areas. Page 37, going concern. So again, we just have a look at that just to make sure there isn't a disclosure needed in the accounts of any kind of uncertainty, and we're satisfied with that, and the accounts are prepared correctly on that basis. And really kind of, again, the next couple of pages, just really kind of some information for you around other areas of the audit. The value for money I mentioned, we will be kind of completing in the next month or two. And then just on page 42, we're required to reconfirm our independence annually to you, and that's what we do there. And then it just sets out the fees as well, in terms of kind of the other work we do for the council. Then in the appendices, Appendix A, we've got just one recommendation there. It's just about kind of how off the bank reconciliations, and that some of the accounts just need those reconciliations completing on them. So one's done for the main bank account, but the others just need that as well, and the council have agreed to that, and they'll take that forward. Follow up from recommendations from last year, so just one around the valuation of heritage assets, so that's kind of now underway in this current year, and the one I mentioned about the minimum revenue provision, which we reported back to you in the body of the report. Then C just sets out the adjustments that have been made. So the two adjustments you can see there are just reclassification adjustments, so just moving the figure from one part of the account to the other, but has no effect on the bottom line of the primary statements. And then you've got the additional ones that have been set out in that additional paper for you that's been circulated. And then just some other kind of minor disclosure amendments. And then just one, the unadjusted one in page 49. So we're happy that's not adjusted because it's not material and it doesn't have any impact on the bottom line. So we're satisfied that that doesn't have to be adjusted, but you just need to consider that, you know, whether you're kind of satisfied with that as well. And there's another unadjusted item on the paper copy that you've got, which is around 82k. Again, a small amount, and we're content with it not being material that it doesn't need to be adjusted for. So there's a bit of a canter through, so I'm happy to take any questions if people want more detail on anything.
Yep. Thank you, Georgia. Any questions at all? Silent today. No, thank you, Georgia, for that. If there's no questions, the recommendation is the report be noted. So that's noted. Moving on to agenda item 5 is the statement of accounts 2021 to 22, and that's on pages 59 to 218. And if I can ask Louise Mattinson, who's Director of Finance, to present the report, please.
Thank you, Chair. So prior to the meeting, we've held a session to go through the statement of accounts in more detail. So obviously the detail that we went through then is presented at Agenda 5 in terms of Appendix A, which is the full statement of accounts. The recommendations to Government's Committee today is to approve the audited statement of accounts, subject to the final pieces of work that Georgia has just referred to that Grant Thornton need to undertake to complete that. Should there be any amendments arising from that additional work, then approval is sought to delegate authority to myself as Director of Finance in consultation with the Chair of the Governance Committee to make such amendments if those are minor in nature and immaterial to the financial position, would not change the accounts. However, if any material adjustments are identified between now and the conclusion of the accounts and sign-off, then we would need to reconvene the governance committee to reapprove those accounts, because it would be a material adjustment that was made. And as Georgia referred to earlier, we published the statement of accounts that you have in front of you that are attached to the report at Appendix A last week. Work has continued on the audit over the course of the week, and three adjustments have been identified for consideration. The first of those has not been adjusted and is minor in nature. It relates to the valuation of the land and buildings at the Whittle Surgery GP, which differed between the value that we were carrying it in the accounts and the valuation by £82,000. Given the figure is immaterial, we've chosen not to adjust the accounts for it at this moment in time. That would be added to the letter of representation, and it will be picked up in the final version of the audit findings report from Grant Thornton. The second adjustment relates to heritage assets, and where there is an insurance valuation of 2.9 million, but we also get a professional valuation of the assets, and these relate to heritage assets at Astley Hall, if I'm correct. The Code of Practice allows the authority to value those assets by any method that is considered appropriate and relevant, and Grant Thornton are content with the Council's approach of valuing them using the professional valuations. We use Bonham's auctioneers to do that valuation. So there is a slight difference between the carrying value of the assets in the statutory accounts you have in front of you and the value that Bonhams have provided, and that is an adjustment of 642,000. So the accounts, the figure in the accounts, need uplifting by 642,000, which we do propose to make that adjustment. And the final adjustment is a material adjustment, and again, as Georgia had noticed in the presentation of the audit findings report, we've identified a double counting of some plant at one of the leisure centres. So we just need to adjust for the overstatement of that asset in the accounts to the value of 2.2 million. So it isn't from the session that we had earlier that went through the accounts in detail. It doesn't change things significantly. More of this is just around the presentation of the figures that are included in the accounts. But given the materiality of those, we will be changing two and not changing another. So the recommendation remains that we are asking to approve the audited statement of accounts today that are attached at Appendix A, subject to those adjustments being processed through. Just for information on the accounts themselves, the requirement was to produce draft accounts by the 31st of July, and then have them as draft unaudited accounts on the website available for public inspection and public comment. The actual accounts went onto the website on the 12th of August as a consequence with some resource issues that we had within the team, but we kept Grant Thornton fully aware of that and were able to present them for audit on the 12th of August. Since that time, we've been engaged with the staff at Grant Thornton to produce the accounts and have met the deadline, or are hoping to meet the deadline for sign-off by the 30th of November. But other than that, I wish to present the accounts for approval. The final approval that's sought today is that the auditors will require a letter of representation from the authority, which is attached in the report at Appendix B, which is to be signed by myself as Director of Finance together with the Chair of Governance, that covers a range of issues about the disclosures that we have made to ensure that we've passed all relevant information, over to Grant Thornton, that all documentation that's relevant to the audit has been made available to them, that we've answered all questions to the best of our knowledge and belief. And again, give all of that information is there at Appendix B, and we are seeking authority for myself and the Chair of Governance to sign that letter of representation at that point that the accounts are signed.
Thank you, Louise. Are there any questions? Councillor Chapman.
Thank you, Chair. I've just got 3 short questions, if that's all right. On page 118, there's a line 3 into the table on investment property, and the 2021 figure there is 32783, and the 2022 figure is 32782. But I think, if this is right, on page 152, both the figures are the same. So I was wondering why that was.
Could you just give me those figures again, Councillor Chapman? Sorry.
Yes.
On page 118.
Page 118, in the table, the 3rd item is on investment property.
Yep.
And on the document I have, it says 32783 on one side and 32782 on the other.
And 326. Yep.
But on page 152,
Page 152.
I think these are the same figures. On the bottom of the second table, they're both the same.
To be honest, I think one of those, it will be a rounding error. Yeah, 3278. So on the balance sheet you looked at for the financial year 2021, you're saying 32783, and that concurs with the figure which is in note 17 on page 152 of 32783. But for 21-22, the figure is 32782 and it's 32783, so it's a £1,000. I would say rounding error that will just be picked up in the final check. Cross-check.
They weren't revalued that year, it just basically took the same values as for the previous year.
On those, I don't know, you can answer.
They were revalued, yeah. They were revalued in year, but they came out at the same value.
Exactly the same figure. Okay. So if I can go to that, my next point was, I think, 197, which is actually the annual governance statement. Now, we considered the draft annual governance statement at our June meeting. And I remember raising a couple of issues which we were told would be addressed, but those issues are still in the document. So if you see the first sentence under paragraph or in section 2, the purpose of the governance framework, there's a word missing again from that document. And also in the first paragraph of section 3 on the governance framework, it again makes reference to South Ribble Borough Council rather than Chorley Borough Council. So I suspect that the one that we corrected in June has made its way uncorrected into the statement.
Chris, if you'd like to speak, please.
Yeah, thank you, Councillor Chapman. The corrections were made. I suspect we've just supplied the earlier version, so I do apologise for that, and I'll make sure that the correct version is provided.
Sorry, my final question was with regard to the letter. That's the question. The page I have a question about is on page 215. Right at the bottom, there's a paragraph about a lease that was signed on the 7th of April 2021. My apologies, it is a rather long document, so I've not. I can't remember if it did come up elsewhere in the document, but I did try and search for it to find out if there was an explanation as to what that was about. But I could do with understanding what that paragraph was about.
Yeah, so the lease in question relates to the lease of the logistics house property, and the lease signed between or entered into between Chorley Borough Council and Chorley Borough Council Property Limited. So the lease was signed on the 7th of April, but the lease was not enacted because we needed to complete the VAT registration and the opta tax on the property itself before it could move into the company. And therefore, during this financial year, 21-22, the company has been dormant because the property hasn't moved into that company as yet, but we are in the process of getting the VAT registration with HMRC, and the opta tax form is being completed for submission to HMRC, and as soon as that element is completed, then the property will move into it, and then the lease will come into being. The lease has been signed, but the rent commencement date needs to be a deed of, it's not called variation, a deed of, variation, the deed of variation to change the date of the on the commencement date of the rent will be amended, and that is with the legal advisors who are in the process of sorting that out. So as soon as the VAT registration is in place with HMRC and the opta tax is in place with HMRC, then the property will be ready to move into that.
Okay, I almost regret asking. But just
Does that make sense?
Sort of. What it kicks up though, are we actually receiving rent for Logistics House at the moment then?
Yes, we are, yeah, because the arrangements in place is the structure at the moment is that we have a tenant who is in Logistics House, and the tenant pays the rent direct to the landlord, which is Chorley Borough Council. What will be put in place is that Chorley Borough Council will lease the property to Chorley Borough Council Property Limited, who will then in turn lease that to the tenant TVS. But until the property is registered with HMRC and we have an opta tax in place on that property, we can't move the property into it.
And does that make us any worse off?
No, it's absolutely puts us in exactly the same position. If you recall, back in the value for money report for previous year, there was a question raised as to why we would want to put the property into a property company, and that was in relation to the Localism Act, and I'm sure Chris will be able to come in at that point to advise a little more on that.
Yeah, under the Localism Act, local authorities are restricted from holding assets for purely economic purposes. So we have to demonstrate that the purpose of holding the asset is for social reasons. If we want to hold it, or one of the purposes under the old social benefit, economic benefit, and residential benefit to residents that used to be in the old legislation. Under the new legislation, this was we took the view that this was an investment asset, so it should be held through a company. Now, a lot of the interpretation of that particular part of the legislation has been a bit fluid by local authorities over the years. Some have pushed it a bit further on the interpretation of what is being held for social benefit by saying we are using the revenue receipts to prevent having to put up council tax, for example. Therefore, that has a social benefit because we're contributing to residents' living expenses and so on and so on. It was a bit of a loophole, which has been increasingly closed by central government, and the movement has certainly been towards the position the council has taken on this. I'm comfortable we're not acting unlawfully and holding it as the council at the moment, because we're clearly trying to move it into the company structure. And to be honest, it's not specifically prohibited by the legislation at the moment, although the advice we've received externally is to say the council approach is correct, which is to put it in the council structure. But the council decision, when we chose to purchase and hold this asset, was quite clear. That the basis of the decision was that we shouldn't be worse off, and therefore the company should be registered for tax and put it in the most VAT tax and be most efficient way held financially for the council. That's why it's not moved in yet, because we've not set up all the structures around the company to enable us to hold it on the financially balanced way.
Yep, thank you, Councillor Chapman, for those questions. Do we have any further questions? No. If not, then the recommendation as paragraphs 2 to 5, but there is a couple of bits I'm going to add on here. So the recommendation is to approve the audited statement of accounts for 2021-22, Appendix A, subject to any amendments which, in the opinion of the Director of Finance and Section 151 officer, are minor in nature, i.e. defined as non-material to the financial position of the Council. 3, to delegate authority to the Director of Finance in consultation with the Chair of Governance Committee to make such amendments. 4, if the Director of Finance is of the opinion that any such amendments are material to the financial position of the Council, to reconvene the Governance Committee to approve the new statement of accounts. 5 is to authorise the Director of Finance and Chair of Governance Committee to sign the letter of representation, which is, you'll have seen at Appendix B, and plus 2 additional amendments to the accounts that you have in front of you, which number 1 is relating to heritage assets, and number 2 is relating to plant at the leisure centres. Do we have a proposer for those? No. Seconder, Councillor Marinell. All in favour? Thank you. Moving on to agenda item 6, which is Treasury Management Mid-Year Review 2022-23. You'll find that on pages 219 to 230. To receive and consider the report of the Director of Finance.
Thank you, Chair. So this report is one of the 3 that are required under the Treasury Management Code of Practice. We produce the Treasury Management Strategy that accompanies the budget to Council in February. We produce a mid-year review, which is the report presented today. And we also produce a Treasury Management Outturn report at the end of the year, which summarises the performance in the area of Treasury Management on the preceding year. So the report in front of you today presents the Council's investment and borrowing position as at the 30th of September. The previous 2 years have been skewed to some extent by the significant amounts of COVID funding that we have received, like most councils across the country. That has come into the council's bank accounts in advance of it being dispersed. Being dispersed pretty quickly, but there was, as a consequence, very high cash balances held until that money had flowed through. But now, the majority of that has now largely washed through the accounts. The only exception to that is the £150 energy support payments that were made in the first half of the year. But by the time we got to the 30th of September, there was only a handful of payments that had to be made, and all of those have been dispersed now. Also, previous years endured exceptionally low interest rates, so the amount that we could earn on our surplus cash balances was limited. But obviously, as is widely reported, interest rates are increasing. The bank rate, base rate has increased, and now we are seeing better returns on our cash balances that are held. Rising interest rates don't pose a risk at all to our existing borrowing, because that existing borrowing that we've already taken out is undertaken at fixed rates of interest with the Public Works Loan Board, and attached to the report is a detail of all of the loans that we have, when they were taken out, what the maturity date and what the rate of interest is that we're paying on those. However, should any new borrowing be undertaken, then that will come at a higher cost. And again, attached to the report is the forecast provided to us by our Treasury advisors, Link, who are seeing that the projections to peak in December 2023, but then to see interest rates come down as we move across 2024 and into 2025. But who knows where the economy will go in that period of time. So in terms of our investments, our approach to investments is always based on security, then liquidity, and then yield in exactly that order. So we would always ensure it's a secure investment rather than chasing a higher rate of return on that investment. And liquidity being our ability to be able to access that at short notice if there were some unforeseen circumstances for which we needed to access the cash. Our average daily balances are approximately £8 million, and the rate of interest that we're currently earning, our average yield is about 0.82%, whereas last year it was 0.09, so there has been a significant increase in that. And we've generated about £33,000 worth just in interest in the first 6 months. Last year it was £9,000 for an entire year, and there were bigger balances, so you can see that has impacted. Our current borrowing stands, or did at the 30th of September, at 69 million, which is broadly in line with the figure at the end of last year. And we have a capital programme in place of 25.5 million. We know we will have a borrowing requirement of about 13 million, but at the moment our day-to-day cash balances are sufficient to be able to meet our current cash flow needs. We do think, however, it is likely that the council will have to undertake some further borrowing at the point in this financial year, but it might be February, March. We might be able to push that into April. So we'll just see how things pan out. As I say, we monitor cash balances both on the day and going forward on a daily basis. So in conclusion, the council has remained within its prudential indicators, those indicators and targets that we set at the beginning of the financial year, included in the Treasury strategy appointed at Finance Council, adhered to its counterparty limits. We've only invested with individuals we agreed we were going to invest with, and up to limits that we agreed we would invest up to. We are achieving increased yields on our investments. Members are asked to note the report, and I'll take any questions.
Any questions, members? Councillor Chapman, what a surprise.
Thank you for that. I was intrigued by the interest rate forecasts, the link interest rate forecasts, and as you say, on the bank rate, that does continue to increase on the forecast till the end of 2023. But interestingly, on the PWLB rates, it doesn't. In the PWLB rates, the peak is now. And they seem to go down the further into the future you go. Is it fair to say that on these projections, it's worth waiting to borrow rather than borrowing now?
Absolutely. If we wanted to borrow at this moment in time, so the December 22 rates, for a 5-year loan, we would get a fix at 4.3%. However, if we were able to hold off for longer on a 5-year loan, it would be at 4.1 if we waited until next September, according to the projections at this moment in time, which is based on the assumptions and the economic outlook and forecast at this point in time. So, that's why we will hold off as long as we possibly can. As I said, we carry in about £8 million worth of cash balances, so we do monitor and manage that very, very carefully, make sure that we've got good access to it, and we maximise that before we would seek to borrow.
Thank you, Louise. Are there any more questions? No. If there's no more questions, the recommendation at paragraph 3 is that the report be noted. We're all happy with that. Yeah, thank you. Moving on to Agenda item 7 is the internal audit plan for October 2022 to March 23. You'll find that on pages 231 to 238. And if I could please ask Dawn Heighton, the Head of Audit and Risk, to present this item, please.
Right, thank you, Chair. So the report you have before you today sets out the programme of work to be undertaken by the internal audit for the period between October and March. Members will recall that this is only the second time that we have done the plan in this way. Usually we present an annual plan at the start of the year, but this year we decided to split the plan into two so that we could take a better account of activity the council was undertaking and the risks it was facing. As I've put in paragraph 12, it has proved to be quite a beneficial approach because the reviews that are identified for this plan we weren't considering when we did the risk assessment in March, but information has come to light that means that it is now featuring in the plan. We have increased our level of resource. So the first plan that we presented to the committee back in March contained 135 days, whereas this one contains 181 days. We've managed to successfully recruit to a trainee post, so they're now in position, and we've also got some temporary resource. So with the successful delivery of both the plans, the first 6-month plan and the second 6-month plan, we should deliver 316 audit days, plus 105 days to Chorley Leisure Limited. Given all that work and all those days, we will be able to provide an audit opinion at the end of the year. As I say, I've attached the plan at Appendix A, but I'm happy to answer any questions.
Yeah. Thank you, Dawn. Any questions? No? Well, no. Councillor Chapman, you have a question.
Sorry, I was interested in what you said about information that's come to light, which has led you to adjust the plan. If you could give us a little bit more detail on that and on the adjustments.
It's not that the plan's been adjusted because we didn't actually produce a second year plan. What it is that when we do the risk assessment in March, we basically score each area. And when we've reviewed it again in August, that score's been adjusted. So if we had done an annual plan, it might have, the reviews might have made it in, but other things that have come to light which are of greater risk, so that we need to take them into account first. It could vary. It could vary from, there may be an area in housing or something that we considered should be maybe looked at, but now events that have occurred maybe reduce that level of risk. So there's nothing specific I could say. I'd have to look at the whole risk assessment again. Yeah.
Thank you, Dawn. Thank you, Sam, for your question. Any further questions? No. The recommendation is at paragraph 2, is that the committee approve the internal audit plan. Do I have a proposer? Michelle Marinell. Seconder, Gordon France. Sorry about it. And getting lost slightly there. And we're actually going to use the microphones to vote. So recommendation is that the committee approve the internal audit plan. If I could ask you to use your microphone to vote, please. Deidre. Yeah. You should have 3 colours in front of you. Oh, yeah. We're done. So, yeah, you could have gone whichever way you'd have liked to have voted on that one. No, thank you. So that's all through. Moving on to item 8 is the Internal Audit Interim Report. As at the 30th September 2022, you'll find that on pages 239 to 246. And Jackie Murray, the Senior Auditor, will present this item.
Hello, the purpose of this report is to advise members of the work that's been undertaken in respect of the internal audit plan for the period April to September this year, and also to give you an appraisal of the internal audit services performance over the same period. Appendix A provides us a good snapshot of the overall progress that we've made in relation to the 6-monthly plan. And Table 8 also provides you a bit more detail in respect of the individual pieces of work that have been undertaken during the period, and if there's been any issues identified, they're detailed within this table. The work undertaken this year, as you can see, has been mostly completed. I think we've just got a couple of residual pieces of work which are just at the final stages, and the report will be issued imminently, and that will be subsequently reported to you in the January committee. And finally, Appendix B gives you information regarding our performance over the period, and you can see that overall the performance has been good. We're on target or above targets in most areas. The only area that we've slightly below target is the percentage of agreed actions implemented by management. Follow-up of these agreed actions is a continual process for the team, so the percentage does change on a continual basis. And unfortunately, the lower percentage at the moment, the majority of those actions are heavily reliant on IT at the moment. So as the IT improvements progress, we should be seeing a lot more implementation of those outstanding actions in the coming months. That's the progress today. I'm happy to take any questions.
Thank you, Jackie. Any questions? No? Thank you. And you'll find the recommendations are at paragraph 2, and members are asked to note the position with regard to the internal audit plan. So if everybody's happy there. Right, moving on to agenda item 9, which is one of my favourites, the RIPA application update. And Chris Moyster, the monitoring officer, will present a verbal report.
Thank you, Chair. Yeah, one day I will stun you all by saying we've undertaken a RIPA authorisation, but today is not the day. There haven't been any applications submitted through that process in the last 3 months.
Thank you, Chris. And moving on to item 10 is the work programme. You'll find it on pages 247 to 248. And to receive and consider the work programme for the committee. I take it you've all had a look at that. Are there any questions? Nope. Thank you. And then on to the final item, item 11, any urgent business previously agreed with the chair, and there hasn't been. So I would like to thank you all for your attendance today and have a safe journey home.